Hey everyone, thank you for coming back to Proof of Pain, the podcast that's Bitcoin focused and Bitcoin adjacent. So today we are talking about everything from digital credit to MSTR to STRC to SATA to BIP-110, etc., etc., etc. And my guest today is my first recurring guest, Nithu Sezni.
That's it.
Is that right? Did I get that right
Exactly.
finally? All
Perfect.
right, man. I'm so glad you said yes again. You came back. I'm glad I didn't throw you off. So, yeah, if
I'm
you could
glad I
give
didn't
people,
embarrass you so bad that you didn't invite me back. So that's
no,
good.
no, I do a good job of that on my own. Thank you. If you can give people just a little bit of, I know we did it last time, but if you can just kind of give an introduction about yourself.
Yeah, sure. So I did 8 years in the Navy, and then I turned to civilian laboratory medicine. I kind of backed that career into an IT career, and then I started selling stock options on the side, and then eventually in 2024. That income, superseded my W-2 income, so I ended up just putting in my 2 weeks and live full time as an options trader. And along the way, somewhere along the lines, got orange pilled, and so I have tried to combine that with the stock market, and I just don't trade anything that's not a Bitcoin treasury company. So I'm not interested in Apple or Amazon. No matter how much the number may go up, I guess I'm taking somewhat of a principled stance to trying to support the Bitcoin ecosystem.
That's beautiful. Yeah, I had a comment. I'm pretty sure it was a bot recently posted something like Bitcoin. The real Bitcoin is BSV,
I
and
saw that one.
no, no, we're not doing that, man.
Yeah, you can just call yourself Satoshi's vision, but that leaves a lot of room to be desired there, I think.
Yeah, yeah, and by the way, if that person's not a bot and you're seeing this, I'm not reading the white paper, but I appreciate that. Uh, but thanks for watching. Okay, so let's dive in. If anybody hasn't seen your episode, I'm gonna link it below. That'll give everybody like a good idea of your background and what you've done in strategy and the different options and that kind of thing. But today, I think that there's a lot of people that are interested in digital credit. So part of digital credit is Stretch, STRC, SATA. I call it SATA. I don't know, SATA,
Mhm.
SATA. So if you don't mind, can you give people an introduction of what digital credit is? Like a very layman's version, and yeah, like what? So why would anybody be interested in that, and what is it?
Yeah, so Saylor kind of pivoted from ways that he was acquiring cash, right? So if you're a business, you got to figure out a way for someone to give you money. So you got to provide some kind of product or service. And one of the things that he was doing previously was he was offering these convertible bond deals. And at first, when they came out, I was like, wait a minute, why are people loaning money at 0% interest? This doesn't really make any sense. And the reason why it didn't make any sense is because it wasn't really 0% interest. They were getting paid on the back end with shares. And so there's a certain um, I guess, ratio there. You're going to be receiving some money up front that Strategy was able to buy Bitcoin with, and then kind of on the back end, the convertible bond dealers were going to be receiving some shares if the share price went up to a certain amount. But they were kind of doing a bunch of funny business in between. So they would hedge half their position, for example, and then if the price goes up, they might hedge it some more. If the price goes down, they might buy some more. And so they were making a bunch of money. Uh, and you could kind of look at that as a form of like a markup. Like if you produce a product and then you send it to a middleman, a distributor, and they mark it up, and then the final product ends up, twice as expensive when it gets to the consumer. And so what I think he was trying to do was kind of vertically integrate his process and cut the bond dealers out. And so what he's offering now is uh, I think it's 11.25% returns right now. I guess you can call it. It's a dividend, and it's supposed to compete against other fixed income products. And just from the interest rate alone, it's better than almost every single other fixed income product available. So in that sense, you have to give them at least a +1 for creating a product that is better than all of the other products available. Now it's new, so you could say, okay, well, I want it to prove itself for a couple of years, make sure that they're paying the dividends for a long period of time. But that's the general gist of the digital credit. Is they're saying, give me cash, buy my stock, and I will give you a very stable price because it's supposed to be pegged to $100, somewhere between 99 and 101, and uh, it's going to give the buyer of that stock, it should give them a stable portfolio and with a steady income. And so, it's really not even pitched at Bitcoiners. Like, it's completely uninteresting to Bitcoiners themselves. They're like, 10% is like, that's not interesting to me. Bitcoiners are getting 30, 40, 50 CAGR historically. So this isn't really pitched at the Bitcoiner market necessarily. This is for like TradFi, people who are already in the fixed income space and want a better product. So that's kind of like the overall 10,000 foot. So we can drill down into any of those if you got more questions.
So Stretch has, 11.5%.
Oh, they're up to 11.5. Okay.
Yeah, 11.5%. Yeah, the rumor is, I guess some people are guessing that they're going to go up to 11.75, but that's just a rumor. Who knows? Do you see? They've been creeping that number up. Do you see that? Do you see that topping out, like, or maybe like 12% or something like that? I mean, going anything above 12% might be kind of ridiculous, right?
Well, until this thing is seasoned, which would probably take about 3 years, from what I understand, when you go and try to pitch these products to either private equity or really anyone who's in the fixed income space, they're going to want to see like a 3-year comparison between yourself and probably other funds. And so until this reaches a 3-year level, I think there could be a lot of volatility in the interest rate itself. And we don't really know what's going to happen with the Fed interest rates. I think everyone kind of assumes that they're going to come down, which seems like it has to, just for the U.S. to be able to afford their debt. But the other thing is too, you would think that people would just be making rational decisions, but a lot of people make decisions based on ego. And if the Fed, if they want to make sure that they're not being perceived as being Trump's yes man, then they may need an excuse to lower rates. So it does make me a little bit nervous that they may just cause some kind of economic crack, and whether they're going to do that with war in the Middle East or with silver short squeeze, or whether they're going to do it with another, probably not another housing crisis, because too many people still remember that. They always catch you with something new that you're not you don't see coming, which actually ties pretty well into this, because I saw Dave Collum on an interview with Simon Dixon on BTC Sessions. And what he said is that the cracks in the private equity market are already beginning. And it's a very opaque industry, meaning since they're not publicly traded companies, it's very difficult to like get detailed information on how they're even valuing their books. And it just seems like there's a lot of inflating of the value of their assets. And he kind of, how did he say this? He said that private equity was a cottage industry of morons. I believe that's an exact quote. And so he's predicting that this market specifically could completely unravel. And if it does, I mean, a lot of that money is going to need a good place to go. And digital credit isn't just built on air like a lot of these other companies. True North, Jeff likes to talk about the bad bond of the week. And so, where are you going to go when all of these bonds that are just built on nothing start to collapse? Well, maybe you turn towards a digital credit that's built on the most pristine collateral the world has ever seen, which would be Bitcoin. And so, maybe that's even part of the next economic collapse. And if so, that would be definitely a boon for the product. But even if that doesn't happen, it's superior in every way, except that it's not mature enough to be able to provide that 3-year track history. So depending on what happens to rates and depending on what happens to Bitcoin's price, I think that the dividend that they have to offer to tempt people to buy the product will change. But I expect it to come down once Bitcoin rips. But it's so new; it's really hard to predict.
What do you say to people that so for example, digital credit is, at least with products like STRC and SATA, obviously it's backed by Bitcoin, right? So Bitcoin is the collateral. What do you say to people that will argue that Bitcoin is not a good collateral because of the volatility?
Yeah. I guess if you're going to hold it mark to market, then that's possible, right? So as Bitcoiners, if we leveraged our own Bitcoin stack and you were going to get a liquidated or some kind of margin call based on Bitcoin's price, then the volatility would be absolutely critical. And you want to make sure that you don't get liquidated on Sunday night when Bitcoin's crashing on some kind of news. But the way that Strategy has tried to structure their product, I think one of the early bonds that they had was was it not encumbered? Maybe encumbered is a good enough word. It's escaping me right now, but it was potentially callable, right? If Bitcoin's price, if they got underwater, they could potentially be forced to sell their Bitcoin. And as far as I know, they've never really encumbered their Bitcoin stacks since then. They've made sure that all of their deals that's impossible. And so I think that's kind of an important clarification, in that although it would be catastrophic for the company, they could just not pay the dividend, right? Their stock price, even the common stock price would probably crater if they did that. But it is always a possibility, and that's one of the third party kind of risks that you are assuming here that you don't really have to worry about as a Bitcoiner. So I'm not sure I even answered that question. Like, the accusation is that Bitcoin is not good collateral because it's volatile.
Right.
I think that ultimately, if you look at the Sharpe ratio of anyone that adds Bitcoin to their portfolio, the Sharpe value actually improves. So and the reason is because it goes up so much more than it goes down, that it literally makes every single portfolio safer. So I think maybe that would be kind of like where I would land with that one.
Yeah. Yeah. So I guess for somebody that thinks that way, obviously don't put 100% of your stack in one of these products that is, but it does have so I guess maybe that's a good follow up. So what, for a traditional, obviously this is not, we should have led with this. None of this is financial advice. How would you structure it? Let's think about it kind of like in a different angle. So 60-40 portfolios haven't really been performing that great, right? Because of the 40% part. Do you think digital credit could take a good chunk of that 40%? So let's say that everybody wants to stay in the S&P 500 or the NASDAQ or whatever it is for that 60%. The 40%, which is bonds, hasn't been performing that great, at least for the last 6 years now. What do you think would be a reasonable amount to put into a bucket of digital credit?
Yeah, in full disclosure, I would say 90% of my stock portfolio is in Strategy and Tesla. So I'm a vol junkie. None of that bothers me at all. So the whole bond thing is pretty unmotivating and uninteresting to me personally. But I was trying to figure out a way to modify the 60-40 into like a Bitcoin only structure. Like if you really wanted to kind of fit it into that mold. And there's a guy named Chris Cole from Artemis, I think it's Artemis Capital. And supposedly he back tested like 100 years of the stock market. And he came up with this portfolio. He called it the Dragon portfolio. And it was like at least maybe 20% gold, 20% bonds, 20% assets, 20% long vol, which was like predicting that everything's going to go to hell. So you're basically like predicting that the VIX is going to skyrocket. think the other, I don't know, 10 to 20% was like commodities or something. And I thought, okay, well, I can just rip gold out of that and stick Bitcoin in. And then the bond portion, these products seem like a plug and play for that. And, you know, there's not a whole lot to choose from right now. You've got, was it 5 of them? Strategy has 5 different ones, and Strive has the one. Actually, breaking news, I guess they filed for some kind of ETF this morning. The only thing that they could really put in it would be Stretch and SATA. So it'd be like an ETF with those 2 products. But I saw that this morning. Strive.
It's got a great ticker. I think it's digital credit, right? So DGCR.
Yeah, DGCR or DGRC, something like that. Yeah. And so, you know, I was kind of, I can't wait to research that one, because I'm like, I don't know, there's only 2 funds. Why wouldn't I just, buy the 2? Like, why do I need an ETF? But, you know, we'll see. Who knows if that'll be a valuable thing or not. But I think that these, you know, especially if you want to support the Bitcoin ecosystem, you could probably form some kind of 60/40 or some kind of dragon portfolio. If I came out with it, I'd probably have to call it the Orange Dragon or something. And you could probably stick Bitcoin in there, throw in some Bitcoin-backed bonds, the stocks. You could throw, a half dozen different Bitcoin treasury companies or miners or whatever the heck you wanted in there. Commodities, I don't know jack about commodities, so I wouldn't. I mean, technically, isn't Bitcoin a commodity? Depending on how you look at it.
To me, it 100% is, right? I mean, it literally ticks every box. So
so maybe you rip out gold and commodities and make it like a 40% to 60% Bitcoin allocation, something along those lines. I can't bring myself to buy volatility and like buy puts. Maybe I should, but I just feel like I just weather the storm. When it all goes belly up, I just diamond hands through those kind of things. So buying insurance doesn't really. I don't really. I just resent it so much. Like I hate having to buy car insurance, life insurance, health insurance. It all kind of annoys the heck out of me.
No, I hear you. I wanted to also share this screen. Let me know if you see it there. Mm-hmm. But it's basically so they're also doing, so digital credit's also going into corporates now. It's into corporate treasuries. So if, you can kind of consider it, if someone is, for their own finances, are considering a 60/40 and introducing digital credit into their 40% bucket and some allocation thereof. I mean, corporates are doing it here, right? So Strive is putting 50 million into their corporate treasury. At first, when I read this, I misunderstood it. I thought it was 50 million STRC into SATA, and I was like, "What? Yeah." I was like, that doesn't make any sense. But yeah, so yeah, I mean, so digital credit is, if you could put it into a corporate treasury, you can put it into your own personal treasury, right?
Yeah, and this actually kind of confused me at first a little bit too. I think maybe I figured out why they would do this, but other people were posting and they were like, why would Strive sell SATA and buy someone else's digital credit, especially when SATA pays more than Stretch does? So you're not even getting paid enough dividend to fund your own dividend. But if I'm guessing correctly, and maybe I should do a full disclosure here. So technically, True North, who I podcast with every Wednesday, got purchased by Strive for like $1. Right? It was kind of symbolic and ceremonial, I suppose, but you got to buy it for something. I think we were technically cash flow positive because we had like one conference and we made a couple extra bucks more than we spent.
Who got that $1?
Yeah, exactly. And so I still don't have like a contract. I think in the future they may extend us independent contractor contracts, but once they bought True North, they did end up sending me a check for the work that I had done, which I thought was kind of cool. There was no agreement there. They were just like, hey, you did this work and we're going to pay you off, I suppose, probably so that I don't sue them in the future or something. But Uh, so there's, I'm not contracted to say anything good or bad about them. And so I should be free to say whatever I want. But if that connection bothers anybody, then just take whatever I say with a grain of salt. But if I had to guess why they did this, if every company kind of has to hold some cash, right? Like normally companies, or especially if you're going to have a financial product on the stock market, you're going to store your cash in US treasuries. But if US treasuries are paying just a few percent, then it's not keeping up with inflation, and you might as well carry a better cash equivalent. And it would be weird to hold your own. Like you can't you can't just hold your own digital credit as your cash. That probably would be, I don't know if that would be a Ponzi, or it just would look kind of weird. So they're like, hey, we don't want to hold US treasuries. We'd rather hold something that pays 11.5%. So it's better than a melting ice cube, like it would be holding cash. So in that sense, it makes sense to me. It's better than holding cash, and if the alternative is holding U.S. Treasuries, then it's a winning move. But it is kind of confusing why someone who issues digital credit would buy someone else's at first glance.
Yeah. Yeah. For me, that was a little bit of a mind bender. But what made it more of a mind bender was that I thought it was actually in SATA. And I was like, this doesn't really make any sense. Here, at least, whatever, is part of your corporate treasury. But yeah, scrolling, I saw this Sharpe ratio, which I think is exactly what we were bringing up earlier about the so putting Bitcoin or a highly volatile asset into your stack increases your Sharpe ratio, which actually. So can you explain that part again, just so I don't.
Well, I don't know how far back this is going. Like if this is showing the Sharpe ratio of IBIT over a very short period of time during the bear market, this may not be quite,
it doesn't say.
quite accurate.
Just as financial engineering, STRC.
Yeah, it would be interesting to see what that is. But in general, you want the Sharpe ratio to go up, if I have that correct. They wouldn't be showing this graph in this direction if it wasn't. But so this has got to be cherry picked a little bit to show IBIT in the most negative light, which I guess I kind of don't like. But you know what? Maybe this is since IBIT's inception. So this is not really capturing. You can't just say that IBIT is the Sharpe ratio of Bitcoin, because IBIT has only been around for.
Yeah. Well, I don't think so. It's probably got to be lower because STRC is newer, right? STRC was only created like in
That's
June.
true. So maybe it's since Stretch's inception.
Yeah. So what are your thoughts on SATA? Because I've heard some people say, well, Stretch makes sense. It's a more established company. Can you speak to the difference between one and the other?
The extra percent that Strive has to offer probably just has to do with their size. Strategy is going to be the gorilla in the space. And so they're going to be seen as safer. They've been employing the strategy longer. So there's, you end up having to pay more when you have a riskier product. So Strive is smaller. They're a newcomer. They're going to be perceived as being, and rightly so, they're going to be perceived as being a little bit riskier. If you wanted to find just one thing that Strive might have a slight advantage, it would be that Strategy is in the process of trying to get rid of all their convertible bond deals. And I believe Strive has a clean balance sheet at this point. So they're just focusing on the digital credit strictly. And they don't really have any of these convertible bond deals kind of hanging over their heads like Strategy does. So, there's pros and cons on both of those sides. But I think Strategy probably just gets away with being the much safer, much more well-known and familiar product.
But what would you say to somebody really brought this up and they're like, you know what? I remember Celsius, and I remember they were trying to generate some crazy yields doing some, promising something kind of similar. So what would your bullet points be to separate digital credit from something like Celsius?
Yeah, I mean, I think the digital credit is better compared to the other products in the space, and they're way more over collateralized than a lot of these other things in the bond market. Maybe that's not even that much of a compliment, because if all of fiat is a dumpster fire and all you're doing is saying, well, we're better than everything that's a dumpster fire, like maybe that's not the best sales pitch. But
Right. Well, they don't
I
rehypothecate, right? I would assume that's
yeah,
part of their
and like,
strategy not
I
to
mean,
do that.
strategy is so transparent about everything. Like, you can just click on their website. You know how much Bitcoin they have. You know how many shares of strategy there are. You know how many shares of stretch there are. You can see how over collateralized it is. You can look at a number of different metrics. You know, how long is it going to take me to recoup my, 10 years to recoup my entire stretch. If I put 10 grand in stretch, okay, it's going to take me less than 10 years because it's 11%, but whatever, 8, 9 years to get basically all my money back. And now my cost basis is zero. There's all of these things that you can look at to say, well, I guess in that sense, Celsius would have looked pretty good because it would only take 5 years to lower your cost basis. But at the same time, I think they're paying you in their own token that they're just creating out of thin air. And so it just seems like it's built with a little bit more transparency. I'll definitely say that. Like, the digital credit products are completely transparent, whereas the things that you mentioned, yeah, there's a lot of like the right hand is passing things to the left hand behind its back, and banks are connected to tokens that are making things out of thin air. And it's but I will say this: if Bitcoin's CAGR goes down to 20 and Stretch's dividend starts approaching 20, like, at what point is it like, okay, it just doesn't even make sense for Strategy to keep offering these things to try to get like 1% ARB out of the deal? If Stretch can't maintain its peg, dramatically under Bitcoin's CAGR, then I think that would be a red flag. So I think we kind of have to watch for that. If they're steadily just pumping the interest rate to keep it pegged, right? If it hits 15, if it hits 17, if it hits 20, that's potentially a little bit of an eye-opening thing, because you're at that point, like, how much value is even being transmitted to the common at that point, right? If Bitcoin's CAGR drops to 30 and you're paying 20, it's like diminishing returns there for sure. So, but even if that were to happen, I know they say, oh, we'll never sell your Bitcoin or whatever, but if Stretch did at some point become a liability, it seems like they'd be able to just break off a chunk of Bitcoin and just redeem all the shares for $101. So,
Yeah.
it's valuable. It's accretive now, and as long as it stays that way, they can continue to run the play. And if it ever stops being accretive, they can just buy it all back. And hopefully they would pivot to something to give shareholders optimism. It would crater the stock's price if they had to do that with no plan to move. Like, if they were just forced to do it, and
Yeah.
and then they're just sitting around, everybody's looking around like, oh, now what do we do with all this Bitcoin? And if nobody's got any ideas by then, that would be a problem.
Yeah. Well, the biggest risk is really, I mean, with digital credit, and again, digital credit, as far as I know, that it's only digital credit exists only with Bitcoin, right? There's no other
Yeah,
digital
and
collateral
just Strategy and
that
Strive
can.
are the only ones who have it.
Yeah. So digital credit. So let's, when I just want to make sure that it's Bitcoin. Just, if there is anything out there with Ethereum or Solana, that's not what we're talking about. We're talking about
No.
Bitcoin backed collateral. Um, the only risk there would be Bitcoin, really. You're betting on Bitcoin. The risk is Bitcoin. If you don't believe in Bitcoin, or you don't think the CAGR is going to continue to at least be over 20, then that's your risk. I mean, then you allocate correctly, or you don't invest in these products at all, because that's really what it is. If you don't believe that that's going to happen, then stay out of that world.
Yeah, you wanted to kind of be not necessarily bearish, but at least be entertaining some of the good bear arguments.
Yeah.
And so we can do that a little bit. I've got some notes here from that Spaces that you
Yeah.
said was pretty good. The one between DarkSide
Before we
and
jump to
Maryland
that,
Hodl. Oh
I
yeah, go
definitely
ahead.
want to do that. I finally found when it comes to SATA, we kind of touched on it, but it seems that the biggest risk is that it now partly depends on Stretch itself, and I think it's part of that $50 million that we talked about, because even though it's not part of, it's not in the, it's not in SATA, it's part of the corporate treasury, and I think there's like 6 months of let me see if I, because I wrote these notes down. So Strive says SATA's dividend reserve now includes 6 months in Stretch.
Mm-hmm.
So because it bought $50 million of Stretch in the treasury, so you're layering a little bit of digital credit tree into this. So that would be probably one of the things to think about when it came to SATA. It's just an additional layer of risk. Would you see that as being correct, or am I
Yeah, absolutely.
exaggerating?
It absolutely is. And but the if you kind of have to compare that to the alternative, which I think I briefly touched on, is that if the alternative is holding U.S. Treasuries, it depends on what you believe. You know, a lot of people would say, well, obviously that's the safest bond, but every empire collapses at some point, right? You know,
Yeah.
do you want bonds in the East India Company? At some point that seemed like a no-brainer, uh, but every couple of hundred years these countries end up kind of defaulting on everything. So something built on Bitcoin as a Bitcoiner gives me way more confidence than even a bond guaranteed by the U.S. government. So, but that's me being a paranoid crypto anarchist. So
Okay, so let's transition to the space debate. So there was a
yeah,
spaces that was held, I think it was on Friday. So we're recording this on the 30th. So that was the 27th. It was a debate on, I think it was, his name is Chris Reed. Well, I'll put
yeah,
the
he was the
link
host.
below. He was the host, and he was, so he was moderating between Marilyn Hodl and
Hmm.
Darkside.
Yep.
And it was really interesting because I'm going to pass it on to you because you took a ton of notes and I think you want to share the screen. But it's
Well, I'll share the screen later if we talk about BIP-110, but I do have tons of notes for this.
okay. So yeah, so I guess okay. So you heard this is fresh in your mind because you heard it yesterday, right? Last night. And okay, so I guess big picture, Dark Side is on. So Maryland argued that STRC is a bridge product that can pull more fiat into Bitcoin, and Dark Side argued that it was a fragile product, basically a Wall Street wrapper that adds counterparty risk. So okay, yeah, give me
Yeah,
your
so let me
summary. What do
just
you think?
let me just list off first, and we can talk about as many of them as you want. But
Okay.
this was the gist of the criticisms that I saw from Darkside. He said that the idea of strategy would get stuck at like a 0.75 mNAV, basically a below one mNAV. He was certain that eventually stretch the whole strategy stretch thing would blow up, and that because it was stuck under one, they wouldn't be able to sell strategy to pay the dividends, something along those lines. He also said that people should just buy Bitcoin. Like, we don't need bridges to Bitcoin. Just educate people on Bitcoin and have them buy Bitcoin. Um, he said that the market itself is organized theft. So, like, why be participating in these shenanigans? And he probably even called them rug pulls potentially. Um, he was saying that situations that stretch could fail, and it was kind of inevitable at some point. He didn't. Well, I want to steel man as much as I can before I criticize, but it wasn't really clear how he said that these things would happen. It was just kind of like a certainty in his mind, but not really explaining how they would happen. um he said they were destined to trade below 1x mNAV. Bitcoin's a better investment, which I definitely want to talk about that one. Stretch, he said that Stretch devalues the common, and also Stretch doesn't actually own their Bitcoin, which I think is a fair criticism. It's held by their custodians. So just kind of starting at the top of all of those, and I know that's a lot, but the idea of strategy getting stuck under one mNAV even if that's true, mathematically, I don't think it matters. And that may be, I don't know, seem like, well, how can that be possible? But let's just say it does trade under some range. Like maybe it never goes above one, goes below one mNAV and stays there forever. But let's just say it goes between 0.8 and 1, but never goes above 1. It's going to suck for the people who bought at 1. But all that really means is as long as they maintain their amplification, which is, their fancy way of describing leverage because it's credit and not actual, loaned money. As long as they're maintaining a great enough amplification to outweigh the difference between the mNAV that they're trading at and 1, it's still accretive, right? So just pretend strategy and stretch don't exist and you're a Bitcoiner. If you buy Bitcoin at the top, right? 67K last cycle. And you're like, you know what, screw this. I'm going to FOMO in and I'm going to borrow another 67K and I'm going to get 2 Bitcoin for the price of 1, right? And I'm going to have this debt. Well, you'd be screwed for the next 2.5 years. But as long as you just diamond hands through that, when it was 125, you'd have been paying the monthly payments on that loan the whole time, but your Bitcoin would end up being worth 2x, and then you could just pay off your loan and you'd keep the difference, and maybe you'd end up with 1.25 Bitcoin or 1.5 Bitcoin. So that's the way that leverage works. And so it really doesn't matter if you're below 1x mNAV if you can diamond hands and wait for Bitcoin to go up, assuming that, it goes up forever, Laura, right? And so I think that's kind of the distinction here, is that they can go below 1 mNAV and with amplification still beat Bitcoin as far as a fiat return is concerned. So I think that's kind of the counter to that one. And you can stop me anywhere you want to take a pause if you got follow-ups.
No, well, my only follow-up to that would be there's only 2 ways to kind of to diamond hand, right? You either have to have enough cash to pay the dividends, which they do. But that was one of the concerns back then with Darkside and Josh. It's like, yeah, you're promising these dividends, and they're perpetual, but you don't have enough cash because you're buying all the Bitcoin with the cash that you're getting. So that was that little risk that they had, and in my eyes, they solved it. Aside from that, you need to have a product. You need to be able to sell something, generate money, whatever it might be. So, which I think this is where Darkside was heading to, where strategy could possibly become the Solomon Brothers as a trading desk for Bitcoin and that kind of thing. So those are the only 2 things, right? You get either you generate cash flow, you're a cash cow, or you've been able to raise enough capital to set aside X amount of years of dividend payments. So if you don't have those, then you're kind of screwed, right? If you're in a bear market where for 2 years you have to pay these interest expenses, but you don't have the cash and you got to come out of pocket, or you got to sell at a loss, that's where it gets tricky.
Yeah, I think that's related to a little bit where he was saying, Stretch is destined to fail in that sense, because if you don't have a positive cash flow business, you just can't do this forever. And so I would agree with that, but it's not really, I don't think Stretch has any danger in failing until Bitcoin is bigger than the bond market. So as long as there's a $300 trillion bond market for the Stretch products to eat, like if the bond market is their food and there's this giant food source, once Bitcoin, and Bitcoin's not even bigger than gold yet, right? Was it briefly bigger than gold?
No.
No, it wasn't, right? It was still like
not even close.
It still needed like a 10x to get to gold, right?
Yeah,
or something like that.
Anyway, I don't know what it is right now, but it's I don't think I've ever even touched 3
because gold was pumping too. So
yeah, but even when we hit 126 and gold was at, let's say, 4, I think the market cap of gold was like over 20 trillion or something like that. It was wild.
So we got to eat gold before we can even worry about like threatening the whole bond market itself. So I'm not really worried about Stretch not having buyers, I suppose, until Bitcoin just starts dwarfing the bond market. And I don't know how many decades that is, unless it's a gradually then suddenly kind of thing. Like maybe it could happen overnight when we just blink and miss it. But as long as there's inferior products for Stretch to be better than, like a side-by-side comparison, I'm not really worried about Stretch failing. I'll probably be long retired, actually retired from retirement by that time that anybody needs to worry about that. That's just kind of my thoughts on that part. So the next part would be the people, his argument was that people should just buy Bitcoin. And at first I'm kind of like, well, no shit, like people should just buy Bitcoin, right? And the one thing that he would do would be kind of like to flip between like a hyper Bitcoinized world versus like getting out of the fiat world. And like, let's say I was able to snap my fingers and say, okay, we have hyper Bitcoinization, fiat no longer exists. Like, what would the world look like? I mean, it would be absolute chaos, war, destruction, famine, whatever. So do we really want hyper Bitcoinization tomorrow? Probably not. Like,
that would be destructive.
Yeah, let's adopt on a safe, how does it go? You want it to die with a whimper instead of a bang or something like that. I might be screwing up that quote, but I think that's kind of where I sit with that. Like, of course, I wish hyper Bitcoinization was already here and the whole control system was demolished, but I would also like to safely transition and with the least amount of chaos and harm along the way. So Stretch is better than the other fixed income products. I think that's kind of like the bottom line there. If someone has a better product, then it's going to have buyers. I think it's offering something better to people who are really kind of just stuck with these inferior low yields and just backed by nothing but empty promises. So it's a better product.
Are, really.
Yeah.
That's literally what it is. I mean, they're literally called junk bonds, right? You get more yield, but then you're risking more.
Yep.
It's so it's the equivalent. It's just a different way of thinking about it.
Yep. And so the next criticism he had was the market is organized theft. And he actually quoted Jeff Booth, who sometimes I describe myself as a Boothian Bitcoiner or a Jeff Booth disciple because of how I just literally just watch every interview. And I'm about
he's great, man.
Three quarters of the way through Price of Tomorrow. I finally got around to reading it. And
it's funny because it barely talks about Bitcoin.
No. Yeah, exactly.
Yeah.
It's really more mentioned Bitcoin one time yet.
Yeah, it's I think it's towards the end where he's like this thing could kind of, it's like a little hint, but the whole well, I don't want to get into this whole rabbit hole, but yeah, the whole point of that book, at least to me, like what really stuck out was we have a deflationary system, which is technology that's constantly kind of improving and making things cheaper, but we're fighting it with an inflationary system. Like our money is inflationary. And I think that's towards the end of the book where he kind of touches on it, but I don't want to spoil.
Yeah, exactly. And that's almost like the 25 hours of Saylor on the What is Money channel. He talks about the history of money and escalation of warfare throughout, thousands of years. And then at the end, it was kind of like, this is how the world is. And by the way, here's a solution to that problem. It's like right at the end, he starts talking about Bitcoin.
It's funny because it's so if you think about it, the Bitcoin standard is similar to that, right?
Oh, really? I haven't read that one either, embarrassingly.
Really? Yeah, it's kind of the same thing. It's like it's at least half the book of what money is and that kind of thing, and then it goes into the later half of the book but same thing with Larry Lepard's the big print. Yeah, the big print.
The big print, yeah.
Yeah, that one, same thing. Same thing. So he's like laying down the reason why the system's broken and et cetera, et cetera, et cetera. And then at the end, it's like this little sly roundabout way to introduce Bitcoin.
Yeah,
I think it's effective because people
Bitcoin Trojan horse.
People are thrown off. Yeah, people are thrown off by just the word Bitcoin. A lot of like traditional people just hear if there's Bitcoin in the name or if it's brought up at the very beginning, they tune out. I've seen it. Yeah. I've seen it in conversations. I've seen it. So yeah. Anyway, sorry to.
Oh no. Yeah. There. And so yeah, he did he quoted Jeff Booth, but I think what what he kind of missed there was like, well, Jeff Booth has a company, right? His company is called Ego Death. So you can't say, okay, well, Jeff Booth thinks that companies are evil, right? So all companies would be more than happy if you wanted to invest in their company, right? They'll take your money and they'll, your assumption is that you believe they will do something good with it and give you more than you gave them at some point in the future, right? You're expecting some kind of outsized return. And if you're a Bitcoiner, that outsized return doesn't just have to beat the S&P 500. It's actually got to beat Bitcoin itself. So it's got to be a pretty good freaking idea, right? It's got to be a pretty good company. And so really, like all companies, if you believe that the entire market is encouraging the fiat system by buying shares, then you would have to assume that every single company is part of the fiat system. But I don't know. That just doesn't make sense to me. Like in a future where fiat is gone, hyper Bitcoinization, like, will companies no longer exist? I think they will, and they're still going to want you to invest. And who are going to be the people who have the greatest ability to invest? It's going to be the people with the capital. It's going to be the Bitcoiners. So someone's going to come to you with an idea, and maybe it'll be, I got the cure for cancer or whatever. And there's going to be some Bitcoiners that are going to say, oh, okay, cool. I'll give you some of my Bitcoin. I want a stake in your company, right? I think Saifedean had it correct when he had that big argument with Saylor on his show.
Yeah.
I think Saif was correct. Like, I would rather have equity than be promised a yield. So I think that's probably the way it maybe will go or should go. But, there's going to be companies in the future, and they're going to raise capital, and, companies living outside of the system are fine. Like, they're not the great Satan or whatever. I don't think so. At that point, I basically just have to ask myself, does their goals align with my goals? And when I look at strategy in that sense, they're demonetizing the bond market and funneling money into Bitcoin, and I'm perfectly fine with that. I think that's a worthy goal. Is it, would it be better if we could just funnel all of those bond buyers into Bitcoin? Sure, but I just don't think that's a realistic expectation. And like I said, having that happen overnight would just be destructive to the world economy. So
yeah, I agree.
Baby steps.
I'm gonna shout out to Rory Cooney. He's I'm gonna share the screen here because he actually just posted about this. I think it was yesterday. I don't know if you can see the screen here. But he actually had this very question where he's basically, so the base case is Bitcoin goes up 42% per year. Well, not per year, I'm sorry, CAGR. Hyper Bitcoinization, like, what does that look like? And then the bear case. So he's kind of proposing that question. So kind of went back and forth, and I'm like, well, I'm definitely on team base case, which base case is Bitcoin 42%, and hyper Bitcoinization. I mean, something for me has to break, right? For that to happen, that has to be like something. So I think it's inevitable that everybody sees why that's important and why it's such a valuable thing. But I think it takes. It's not going to be easy for people in power to let go of the current system. So I just don't see that being the case. And the bear case, I guess I just have to think more about it.
Yeah, we want that to happen so slow that it almost ends up being like your appendix. Like we want the fiat system to just shrink and not realize it's no one cares or needs it anymore, and it can really continue to exist forever as like a, what is it called, a vestigial function. Like maybe it's just USD continues to exist forever, but it's literally just an instant transfer, pass through, so that the government feels like they have a reason to.
Yeah, it'll be Tether. It'll be.
Oh, don't get me started on Tether. I hope not.
Well, it'll be the equivalent, right? I mean, that's literally what it would kind of be.
But Darkside's his theory is actually correct in that it is the plan. Like the fiat lizard people that are in control, this is their plan, right? To to make strategy a honeypot and co-opt it somehow to get people buying Tether instead of Bitcoin. And we all own paper Bitcoin and they own the real Bitcoin. Like that is their plan. But to a certain extent, like if every single person holds the amount of Bitcoin that they need, right, to ensure their future, at some point, whatever money you have left over, you can do whatever you want with it. You know, you can gamble on trying to get higher rates of return with, you know, you can go with Jeff Booth's company at Ego Death, or you can invest in strategy, you know, like whoever aligns with what you're into, you can invest in those companies. And I don't think that that's necessarily a bad thing, but you do have to have your Bitcoin in cold storage if you're technically able to do that. And once you do that, I think nothing else matters. You can take whatever kind of risks you want beyond that.
Yeah, the only thing I would say is when it comes to hyper Bitcoinization, I mean, now remembering the Sailor and Saifedean, it's been like a year, right? That they had that little spiff.
Yeah, it was like a year ago.
They're both right, because it's like, are you just not gonna take any or make any investments? Of course, it's just going to be fewer and it's going to be better bets, right? So it's not right now. We have cheap money, so it's so easy to kind of like just
throw money at everything.
Yeah, especially when things were close to 0%. What's the risk exactly? It's like it doesn't really matter. But if it's truly Bitcoin, you have to actually go and go to cold storage and actually give somebody some of your your hard-earned sats. That's going to require like, okay, well, even if let's go crazy and say that it's been, I don't know, it's 50 years from now, and the CAGR of Bitcoin is now 15% or 12%. You have to add like what percentage on top of that? Just like a risk factor. You got to add like an extra.
Well, you got to be compensated for your loss of use, right? So
correct.
If I've got 2 Bitcoin and you want me to give you one, well, even if you pay me the one back later, you kind of got to give me a little bit extra on top, because I was deprived of the use of my Bitcoin in that meantime.
And you're putting it at risk. It's not just because there's no guarantee you're getting it back. Right. That's the real risk. So like, man, I would at least double it, right? So if it's 12%, you would be required, what is it, 24% at least? And the reality is that a brand new company, it would have to be such a unicorn for you to like go crazy on, because most companies, when you're brand new, any new company doubles quickly, right? It's when you get past the first 10 years or so that things start. It's hard to get an established company to do even 20% per year. Like it's very difficult to do 20% gross profits, like turning over 20% per year. That's not CAGR. Like every year growing 20%, that's a pretty high bar. Especially in my industry, because I'm a distributor. So like I deal with low margins. It's not easy. So for me to depart, I would have to, at the very least, look for 24%. And this is me thinking 50 years from now. And assuming that the CAGR of Bitcoin is down to 12%, I would need such a good reason, such a good story, because it's almost guaranteed that you're going to lose that.
Yeah. Well, except that everyone right now is imagining we're all drowning from inflation. So you need these outsized returns just to make it like keeping up and like not drowning and getting underwater. But in the future, 50 years from now, if everyone's on a Bitcoin standard and everyone holding Bitcoin is actually capturing deflation, this is going to be everything is going to be completely inverted from the way that we think about things. You can actually be losing Bitcoin and still getting richer.
Well, yeah, because of compounding.
Yeah, the rate at which your Bitcoin is becoming more valuable due to deflation, if you're losing less Bitcoin than that, your purchasing power is still increasing.
Yeah.
And that's kind of like the basis. Like if you go to, I think, was it Hornet Hodl or Bitcoin Hodl? Anyway, he's got a FIRE calculator for retiring on Bitcoin. And, at current prices, if you put in 20 Bitcoin, I'm going to spend 10% a year, you will end up with like in 30 or 50 years, you'll only have like 2 Bitcoin left, but you'll be worth $50 million.
Yeah.
like your 20 Bitcoin will have shrunk to 2, but your fabulously wealthy, more than you even are today, you know?
Yeah. Well,
So,
that's one part of it, right? Because the other part of it is almost like what Jeff Booth says. So if things truly are deflationary and the price of everything, like TVs, what we were talking about, the Sony
mhm,
Trinitron, when we got that, I think that was like, it was a couple, I think it was close to like $2,000 for that 32-inch Sony Trinitron
mhm.
CRT thing that weighed like 300 pounds. Then it was the plasma. That 42-inch plasma was maybe $1,000 at the time. Maybe it was
Hmm.
like a special or something like that. Now you can get a 75-inch or 70 whatever 78-inch for like $600 or something. Yeah,
Yeah.
I think I saw something like that. So things are deflationary. Technology makes things deflationary. So if you combine the two, so like one part of it is what you're saying, yeah, that over time it's going to compound and just the CAGR, it's going to take it to, yeah, two Bitcoin will be 50 million in, what'd you say, like 30 years or something like that?
Yeah. 30, 50 years, something like that.
But the beautiful part about it is that, yeah, so that's the dollar nominal part of it. But then your actual, the amount of what you can buy, your actual, what is it, like your inflation adjusted
Your purchasing
price,
power type of
your
thing.
purchasing power, there we go. Your purchasing power actually is like insane
Yeah.
because deflation, the technology has deflated the prices of things you actually use for the most part. Food, I don't know, unless tech really develops. And then do you really want tech in your food? I
No.
don't know. Yeah, so food may remain. Housing, I think we go back to the same thing. Like you have all these robotic 3D printed homes nowadays. I think
Oh yeah.
prices of homes
Housing
are going to go
prices will
down.
be deflationary at some point as
I think
well.
so. So you have this asset that's increasing in value over time, and your purchasing power is going to greatly increase because of that alone. But if you add on top of that the deflationary aspects of technology, it's just you're on the right track.
Now, Safe does has this weird theory, and he studied like interest rates over time, and he said over hundreds or thousands of years they trend towards zero, and like, um, but he
Yeah,
has this little
he
weird kind
mentioned
of,
it there. Yeah,
yeah, he's got a weird theory where he thinks you will be able to loan Bitcoin at 0% because holding it does have some carry cost. Like I have to safeguard it. You know, maybe I'm paying a custodian, you know, to be my what, two of three multi-sig, whatever. So like technically holding Bitcoin isn't free if you're using some of those things, or even if you are doing it all yourself, like you still have to pay for electricity to power your node and, you know, different things. So Bitcoin, you know, we say it doesn't decay, but it kind of does a little bit. And every time you make a transaction, you have to pay a little fee here and there. So, you know, it does cost you time and energy and, you know, some of your life force to safeguard it, right? And you have to defend yourself from $5 rent attacks and all these different things. And if you just loan the damn stuff out, it's like, well, nobody has a reason to rob me because I don't have any Bitcoin. So to a certain extent, you could make an argument that what we were talking about before, where someone should have to compensate you for loss of use, it's almost like taking a burden off of your back. Like, you please take this Bitcoin off of my hands so I don't have to safeguard it. You know, it's a weird thing. The future is going to
so
be
the
extremely
idea
interesting
is
to
that
watch.
it's I just can't imagine
I know.
like how much because we're really thinking ahead, so we might not even be here. But let's assume that it costs to hire this custodian to be your two of three. Well, no, you don't want them to be a two or three, but like for whatever, for them to have
You're
access to
one.
one
They'll
of
be
the
your one
keys.
of three, I would think,
Yeah,
right?
you're one of three, correct? Yeah, because you always want to remain control. But let's say, but you know what makes sense is at that point, you probably your family has grown, and we if we get to this point, then a two or three is not enough. You probably want a three of at least a three of
Three or
five
five.
or a five of eight or who knows what. So it gets to the point where you need maybe two or three custodians
Oh
because maybe
God,
you don't trust your own family,
you don't
right?
trust one. Oh yeah, or you don't
Yeah,
trust all the custodians either.
or all the exactly. So these custodians, and you got to hope that they don't collude and whatnot. So you're paying each one. I just can't imagine them charging a crazy amount. But let's say it's some wild number. Let's say it's the equivalent of
But
each
but even
twenty
if it's a
thousand per year.
quarter of a basis, like even if it's just 25 basis points, it's still something. It's, you know, your Bitcoin won't last forever.
That's true.
If it's not
That's true.
zero, it's decaying.
Yeah, but zero, it's I don't know. I'm trying to like see how mechanically that works, right? Because if you're lending that money, so you would have zero control over that Bitcoin that you're lending out, or would you still have some sort of a multi-sig with that party? And you would be like one of the, like if you would be on the board, right? You would be on the board and you would be one of the party members to approve it. I just can't imagine 0%, man. I can see maybe as low as 4 or 5%, but 0%,
But
that's
that's why I think
such a
equity
wild.
makes sense because, like, hey, I want to start this
Yeah.
business. I need a Bitcoin. And
Yeah.
okay, here's a Bitcoin. I want 20% of the company. And if you're successful, then we're sharing the profits. And eventually, maybe I'll get my Bitcoin back. But but if you've got two Bitcoin in the year 2075, and you're worth $50 million,
It's a little
every one of my
sliver.
cousins is getting a million. To start their
Yeah.
business. Like, you know what I mean? You just graduated from high school. Here's your 0.001 Bitcoin or whatever. Go upgrade the world. You know what I mean?
That's actually a good way to think about it because, yeah, it's like when you get to that point where you have so much wealth that you can actually truly give back. But
Hmm.
we go back to like the lack of control. With control comes responsibility, right? You got to make sure that you don't screw up and lose these
Yeah.
keys and whatnot.
And that's why Bitcoin, they say you get the price of Bitcoin you deserve, but you also get liquidated at the price you deserve. So if you don't handle Bitcoin responsibly, which is the thing that you have to watch these Bitcoin treasury companies, right? So you have to watch Strategy, you have to watch Strive, you have to watch all of these companies
Yeah.
because the people who mishandle their Bitcoin lose it, which is the way that it's supposed to be. You're not supposed to just get a bailout from the banks because you invested in mortgage-backed securities, and all of that shit was just a card house, right? And it just comes tumbling down. So you're supposed to get wrecked and not just what does Simon Dixon call it? Privatizing gains and um, that losses are absorbed basically by everyone else.
Yeah.
Socializing losses and privatizing gains, something along those lines. I probably
Yeah.
misquoted him, but I think you get the idea. So that's not supposed to happen. And when everyone's owns Bitcoin, you screw it up, you lose your Bitcoin. And I think that's going to. I just want to live long enough to see what a world looks like when people are actually acting responsibly, and learning actual lessons instead of being propped up by bailouts and all that good stuff.
Yeah. It's actually so I was thinking about that not so long ago because I remembered a conversation. He doesn't talk about it too much publicly, but Saylor himself, personally, he owns like, I don't know, let's say 2,000 Bitcoin, something like that. When he dies, the keys are dying with him. And that's his contribution to the network and to the fellow Bitcoiners.
Yep.
That's his, he's basically burning the Bitcoin. Basically, that's what it would be. So that's an interesting part. And then side note on that is, I don't know if anybody's aware that in Florida, Saylor University, well, Saylor Academy has become Saylor University. So
University,
now,
yeah.
yeah, so now I think there's only 4 degrees that anybody can actually. I think it's weird how it works, but I guess globally, anybody except like the communist countries, so like not Cuba, not North Korea, not uh, whatever. Some of
Well, I'm
these.
sure they've got public free educations anyway if they're communists, right?
Oh yeah, it must be amazing.
So, yeah, it's supposed to be great.
But yeah, but anybody from any part, most part of the world, can sign up and get. You could basically graduate
Yeah,
with not. Well, I don't know if it's a PhD, but you can actually like. It's a university. It's like a straight up
yeah.
university. It's for free. It's amazing.
And he basically said that his ultimate goal is like he wants to generate as many free PhDs as possible, because he said all of these problems that the world has are going to be fixed by people that get education,
Yeah.
and um, Elon wants to get us to Mars, but I think to solve all the problems we have on our own planet, we need a bunch of highly educated people, and I think it's going to be great.
I think it's amazing, man. I think it's amazing because just access to. So first of all, let's say that you're lucky enough to be born in the U.S. You have to get into some insane amount of debt to get a PhD. And when you can get just as good, I haven't done the university myself, Saylor University, but I'm assuming it's just got to be equivalent. But anyways, I didn't want to get too far into that tangent. I just wanted to
Yeah,
give credit to Saylor because I know everybody talks about the Bitcoin part of it and strategy and stretch
yeah,
and this and that, and it's like, dude, what even before the university part, just having access to the Sailor
To
Academy
the information, yeah.
and the information, it's good. And I think, funny enough, I think Safety's content is there for free.
Oh yeah, I've he's got his Principles of Economics book that he came out with. He's got his series online that he talks about different sections in his book, and it's amazing. I'm loving it.
Yeah, I have to pay attention there. Was there anything else going back to that the dark side and Maryland HODL spaces?
Yeah, just a couple more. So he said it's destined to trade below mNAV, and I kind of think I addressed that before, but like, where's the evidence for that? Like, there's companies are forward looking, so you could argue that any company that has prospects should have a forward looking PE. So where's the evidence that not only should it not have a forward looking PE like every other company, but it should actually be negative to their holdings, which would mean that you're discounting the actual value of their assets below their value and discounting the value of the company completely. Like,
Yeah,
the company's worth zero, like the BI software is worth nothing.
yeah, yeah.
So I think that's kind of hard to understand why it's destined to just trade below one mNAV forever. I will say that mathematically, selling common to consistent dilution does mathematically trend the mNAV towards one, but almost like, how 1 over x, y equals 1 over x, it reaches a line but never touches it.
Yeah.
And I can't remember what that's called. The tangent is not it, because that actually touches it. Anyway, whatever that mathematical term is for infinitely approaching a line but never touching it, I think that's kind of what it is. It's not so 1x is kind of a magnet, but like trending towards 1x mNAV forever, but like there's no reason to think that it should ever go below it, in my opinion. But here's one thing that I thought was interesting. So he said that Bitcoin is a better investment. And I would say that that's wrong. And the reason is because I don't think by definition Bitcoin is an investment. It's just currently better than every single investment that exists. So it seems like it's an investment. But if you imagine what would happen in a hyper-Bitcoinized world where fiat doesn't exist, like, how would you invest in Bitcoin?
Yeah,
You would need Bitcoin to buy Bitcoin with. Like, how does that even make any sense? Like, oh, I want to buy some Bitcoin. Well, I need Bitcoin to buy Bitcoin. At that point, like, Bitcoin is not an investment. It's just, its CAGR is so high right now. It's just better than almost everything, the returns on everything else that you can imagine. But once
I think he is thinking short term, though. I think he's thinking more like in the near term. I don't think he's thinking out 50 years. I think he's just thinking more of a, like currently. Just
right.
You eliminate the risk of strategy, you eliminate the risk of some of these products, and you just hold spot Bitcoin, and then in theory, it should outperform it. Even if you don't outperform it, it's just by stepping aside from some of these risks, it's basically a better investment just in itself. I think that's his perspective.
Yeah. And I do agree with his point where, like, at some point they will have to do something else besides this, because once the interest rate that they have to pay on the dividend starts to approach Bitcoin's CAGR, they've squeezed all the juice that they can out of that. And they kind of have to come up with they'll have to pivot to something else. And I'll make a prediction. I think he would deny it now, but I think they'd end up having to be like a venture capital firm, because if you need money to invest, you go to the people who have all the capital, and they're going to have all of it. So I think they would make a perfect venture capital company, and they could probably use their BI software, if it even exists at that point, to analyze the risks of certain people's business proposals or whatever, and maybe they could even help them with the start of that with that process. One sec.
Yeah.
And I think they would say now they have no interest in doing something like that, but it just seems like that would be the perfect role for a company that has all the capital. Like, okay, work with all the people that need capital. Or at the very least,
you partner up with. So if I think he even mentioned it in that video, his little debate with Saifedean, but I think he said he doesn't even want to get, or I forget if he was talking about himself or strategy, or if it was like some hypothetical 65-year-old guy. But the idea was you have the Bitcoin. You don't want to worry about who to lend it to. You let the banks deal with that. So you partner up with JP Morgan. JP Morgan knows that you have the Bitcoin. You don't worry about who. They're the ones doing that part of it and taking on that risk. They
Yeah.
guarantee you 5% or whatever it might be. And that's so maybe that's the role that they will take instead of I do
Right.
agree with you. I think they do have the tech and I think they have the ability to take become a bank if they wanted to. Would that be the equivalent of what Darkside was saying with becoming Solomon, like the Solomon Brothers? Because Solomon Brothers is just like the trading
Probably,
desk,
yeah.
right? So
I don't
it
even know
would be
what
the
they
same,
do.
or it would be a little bit different.
I don't know what Solomon does.
I think Solomon was, yeah, I don't know either. I think Solomon Brothers specialized in bonds at the time and trading bonds. I don't know. Yeah, long story short, I think the gist of it was if they could, since they have access to so much of the what do they call like the not the order desk, the over the counter. Like some of the over the
Okay.
counter stuff, a lot of their buying happens. Yeah, I can't imagine Sailor or Fong or some of these guys like literally clicking buy on Coinbase. You know, I don't. You know, if it is, not a good idea. But yeah, they have control. Like they could be the lead. They could be the over the counter party. You know what I mean? Like they could be the. I think that's the idea that Dark Side would bring up here. The amount of trading fees that they would generate. I mean, it would dwarf whatever the BI business does, right? I would assume.
Yep.
Yeah.
Yeah, I
So
think that was the last thing I need to talk about because he said selling stretch devalues the common, which I think that's been kind of like refuted to death. Like, yes, it's accretive dilution, and really that's every company, right? Every dollar that a company spends like devalues the common. The whole point is that we're saying, okay, we're going to spend $10 over here on, or $10 million to build a factory. Okay, that devalued the company,
yeah.
but we're going to like buy something or produce something that makes the company more valuable in the future. And he said as much at his interview at Strategy World, where they said sometimes we're going to take some positions that have negative mNAV consequences on the short term, but it's going to strengthen the credit quality of these products, and then over time we will actually make more money on the back end by being able to sell more stretch into the future by paying a little bit out of pocket now for the cash reserve, things like that. Was kind of his excuse for why they will have maybe quarters with negative Bitcoin per share numbers, but in the future it should result in higher gains. And over a period of 4 or 5 years, if that doesn't happen, then we know the thesis didn't work.
Yeah. Yeah. I think.
Yeah, so that's everything I think I had for that spaces conversation.
Yeah. I think so too. I mean, I'll put a link below. I think people should definitely listen to it. Okay. So what do you, from Maryland side of it, do you remember anything that resonated with you, or was it more the dark side that
Well, I
hit some trigger
think I
points?
was trying to focus on
The negatives?
the bear side. You know what I mean?
Yeah.
I wanted to be able to understand the bear side. Like I think everything that Marilyn said, I probably already agree with. So I was like, I don't need to focus on stuff that I agree with. There's plenty of that.
Yeah.
Yeah, I was mostly taking notes on dark side of the argument.
Okay. I have a question. What do you think about a 6102 attack?
Yeah, so I think that was another thing that Darkside mentioned on that Spaces, and I think it's inevitable. If you just look at probabilities, anything that's possible given a long enough time frame is inevitable, right? Even getting struck by lightning, you go long enough, it might be a 1/10% chance, but into infinity, if you were immortal, you'd get struck by lightning at some point. So I think that's definitely maybe not necessarily definitely in their plan, but once the uh, the country kind of got into a tailspin and got desperate enough, and Bitcoin is 10 million, 50 million a coin, and Strategy's sitting around with 2 to 4 million of these things. I think they would definitely try. So I can't imagine it happening early enough that it would matter to me as an investor, but it's one of those things that you have to at least entertain. a bunch of people might call it FUD and like, oh, that'll never happen. But empires in decline can get pretty desperate, and they will grasp at anything to stay alive. Yeah, and so, but how do you figure that out, right? So I don't really do valuation models, but if something like this is worrisome to an investor, then you just put it in your valuation model, right? If you think that strategy should be worth $1,000 a share in 10 years, right? 2036, that's your valuation model. You think power law, Bitcoin gets to X price and strategy should be at 1,000. Then you should say, okay, well, I think there's a 1% chance, whatever you think, 1% chance of a 6102 and strategy's price goes to zero. Okay, well, then you just subtract 1% of the $1,000 share price, and what is that, $10 a share? So then your valuation model is $9.90 now. I think that's just, you figure out what all of the potential black swans are, and you add them up, and you subtract some kind of number from your valuation model, and you just build it in that way. But it doesn't have to be like an all or nothing thing. Oh, they're going to 6102 and I just can't invest today. Like, I think that's the reasonable way to make those calculations.
That makes sense. And I think they're going to buy it at a premium, right? So there's going to be a premium to pay for it. Although Trump,
that's not how they did gold. They confiscated everyone's gold and then they repriced it up. So what you would want to do in that scenario, if it plays out in the same way, is you would want to, your strategy would get strategy's Bitcoin would get confiscated, but if you're holding in self-custody and then they announce, oh, by the way, we sold all of our gold, we confiscated strategy's Bitcoin, and Fort Knox is full of Bitcoin now and not gold, I think Bitcoin's price would go up. So as long as you're holding in cold storage, I think you're fine.
I don't think they would do just a confiscation. I think they would just straight up buy out strategy. You don't think that would happen? No.
Oh, I guess because they can print money. They can print money, but they can't print Bitcoin. So they would just print enough money to buy Bitcoin with, or buy strategy with. Like, couldn't they just print enough money to buy Bitcoin?
Where else are they going to get the money for that?
Yeah. I mean, but if they're just still money printing, because but at some point, if fiat doesn't even have value, like dollars are just monopoly money, then there would be no way to even buy it if dollars are meaningless. So they'd have to.
Well, this is before that, so I'm assuming the 6102 could happen in the next 5 years. Let's say. I think that's like the vision for that. If that were to happen, and I don't think it would be a typical 6102. I think it would be them buying strategy out. It would be the quickest, easiest. And so there's two people that brought this up. I think towards the end of mid last year, I think Josh Mandel hinted at it. And then it was Tom Lee.
Yeah, you're right. They might do it differently. Like, same principle, but you got to do it a little bit different so it doesn't seem like it's the same.
It's too visible nowadays.
The same, yeah.
I feel like it would be such a shock to do that. But I could be wrong. I mean, obviously, I've been wrong many times.
Yeah, and that's why I want to. The question that I would ask Saylor if I got the chance would be, what's your plan for when they take you to room 101? You familiar with 1984?
Yeah.
The book. So when they take Winston to room 101 for re-education, like everybody breaks in room 101. Like nobody comes out the same way they went in. So, when he's sitting on 2 to 4 million Bitcoin and they take him to room 101 and they're like, give us your Bitcoin. Like, what's his plan for when that goes down? I guess you could call that a 6102, room 6102. When they take you there, what are you going to do?
Yeah. They just tape his eyelids open. And they try to
exactly. And, but you know what? Wasn't it Batman that had he had a plan for what happens if every single one of the super friends went rogue?
Was it?
He had like the one of his arch enemies broke in and stole all of his plans for how he would defeat Superman and how he would defeat Wonder Woman and Aquaman and all those guys. And they used Batman's plan to take out everyone in the group. And then I think it was probably left to just Batman to figure it out on his own. But yeah, I mean, Sailor needs to take a page out of Batman's playbook and, be ready for whatever they throw at him, because it's coming. If they've got that much Bitcoin and it's worth bajillions of dollars, somebody's going to be coming for it. So you got to plan for every eventuality. So hopefully Sailor's like Batman.
The whole spam thing started, was at the end of 2024 or early 2025,
Yeah.
and it kind of snowballed into Knots. And then the Knots, can you kind of give us like a little bit of what's going on with Knots, and then has that kind of shifted into BIP-110, and where you kind of stand? Where do you see? And again, I don't want you to like. I feel like I'm putting you as a a defender of BIP-110. That's
Yeah, I do support
don't
it.
feel that way. Yeah, exactly. If you can give a little bit of a history of why Knots and how BIP-110 has become a thing and why you support it, I guess, so people can kind of understand why it's important to look into this topic.
Yeah, and so I think what's important to understand about Bitcoin as a protocol in general is when it first started, there were devs, miners, node runners, and hodlers, right? And they were all the same person. So if you were a dev and you wrote some code and it favored the mining side, well, you actually had to pay the cost as a node runner, or you paid a cost in the transaction when you wanted to send a transaction. There was incentives were aligned, because if you change the protocol to favor one area, you actually paid the cost yourself. And what we have now is different factions. So there's no reason to even assume that the devs own any Bitcoin, right? I mean, some of the OGs probably do, but some of these new kids, I don't know, some of them were involved in like shitcoin projects. Do they even own Bitcoin, or do they believe in Bitcoin transforming the world in the same way that I do? And so now we've got different factions with their own incentives. And so I think what we're learning is how these factions are going to compete, number one, and who actually runs Bitcoin. And I think the answer is the nodes run Bitcoin. And if you think about the way that the layers work, right? So the devs write the code, but then the node runners have to decide whether to run it or not. And the miners, of course, want higher fees, and the users want lower fees. And so there's a little bit of opposite incentives between those two parties, but the node runner lies in between those two layers and acts as basically an unpaid volunteer referee to resolve those disputes. And you kind of have to ask yourself, if the fiat system is not going to go down without a fight, how will they attack Bitcoin? And so each one of these layers can be attacked, and literally are being attacked every second of every minute of every hour of every day that we live. And so let's just assume that attacking the dev layer was a credible threat. You would either get some devs in there that were not aligned with Bitcoin, or you would just maybe fund certain projects that are aligned with what you want. And someone getting paid to write code is probably going to write code that makes the person that paid them that happy for the most part. And so you could kind of do it in a little bit of a slick way that way. And so what we really needed to find out is whether Bitcoin is going to be resilient against these kind of attacks and these attack surfaces. And the block size wars was the first example of that, right? So you could argue whether the big blockers or the small blockers were hijacking Bitcoin. But we did learn an important lesson, and that was that the nodes basically decided, okay, the miners do not run Bitcoin. And so we kind of learned that lesson. And we're learning a similar lesson in this case, but one of the biggest weaknesses of democracy itself is the tyranny of the majority. And so if the 51% win an election, the 49% gets stuck with that person for the next 4 years, right?
Yeah.
And nobody likes that feeling. And so what we're about to find out potentially is whether the minority that feels like they're being taken advantage of can actually defend themselves from the tyranny of the majority. And I think that's basically what's happening. We've had Core that has basically been an empire. They've had a monopoly on the protocol since the spam debate really started, kind of going downhill. You could say SegWit was the beginning of the end, but definitely when Taproot came in, that's when ordinals and NFTs kind of spun out of control. And so they've either been directly responsible for the state that Bitcoin is in, or they were, incapable of stopping it, right? So regardless of whether they brought us here intentionally or were powerless to prevent it, kind of doesn't matter because this is where we are. And so I think that is the thing that we need to find out. And it's better that we find out now when Bitcoin's under $1 million a coin, and then when it's 10 million a coin and the damn thing crashes to 750,000. Like, nobody wants to be figuring this shit out 20 years from now. So as much FUD and things it's definitely a battle that's happening between these two camps, and it's kind of bitter at times, but it does need to happen now. But the issue is whether spam is a legitimate case on Bitcoin or not. And my contention is that it's not, but even I'm going to call them the spammers, but even the pro-spam side who say that they're against spam will say, no, we're against spam. We just don't think it should be done this way. So if you want to give them the benefit of the doubt and believe that, I think this statement is objectively true. Spam, which the definition of spam is all arbitrary data, period. So you can say an acceptable amount of that spam is 83 bytes or 256 or whatever. But I think it's objectively true that arbitrary data itself is increasing the attack surface of Bitcoin, right? If it didn't exist, then it wouldn't be a way that the fiat system or whoever could attack Bitcoin. And so I think that's the frame of reference that I try to attack this problem from is, in my mind, okay, arbitrary data, aka spam, is an attack surface. How do I shrink that attack surface? And, I try to keep that in mind through this entire lens of the problem.
Do you see any valid use for arbitrary data?
So valid use, I would say no. But the one thing that I will agree with the core side is that due to steganography, which is like tricky ways that you can sneak code in, it is true that it's impossible to just wipe that out completely, right? So while I don't admit that there are valid use cases, it's going to happen to some extent. And that's why I think keeping it in mind of, okay, that attack surface will continue to exist forever, but I can also try to make it as small of an attack surface as possible. And you know what? I do have some notes on whether that kind of highlight whether something is a valid use or not. So maybe I should just go ahead and share my screen and go over what I'm calling the protocol decision tree. Let's see, share screen window.
Is this a worldwide first?
There we go. All right, so does the protocol enhance or protect the attributes of money? That's to me the first question that I want to ask. Should I upgrade from Core V29 to V30, or should I upgrade from 28 to 29, or should I choose Knots over Core V30, or, should I start signaling for BIP-110? And if you've listened to the What is Money podcast, you've probably heard these attributes of what money is, right? So you've got divisibility. I'm just going to quickly go over these. That's, subdividing monetary units into smaller parts, right? You can have one Bitcoin, or you can just have, okay, send me 1,000 sats, right? That's divisibility. We've got durability, which is resistance to physical degradation over time. And, Bitcoin is being secured by the network. And as long as there's a few nodes running and miners, this thing should last forever. So it's extremely durable. Recognizability, I'll talk about this in a little bit. It's, people, half the planet probably doesn't recognize Bitcoin as being money, but everybody understands that whatever their local fiat is money.
Right.
And so as Bitcoin's network expands, recognizability will increase. But part of recognizability is actually, it's a subset of this property called acceptability. And I'll talk about that a little bit later. So there's portability, and that's the ease of transport. You can put your Bitcoin in your brain wallet and sneak out of the country if the civil war pops off, things like that. We've got scarcity. That's the 21 million, hard cap, which, a little bit of a side note, all of these things, actually, maybe I'll talk about it when I get to immutability, but, fungibility is going to be, hey, is a sat a sat? Can we interchange, if I send you 50 sats, is it the same thing as when somebody else sends somebody else 50 sats, right? And then there's immutability. So the rules governing the money are not going to be altered, corrupted, or reversed. And this is only Bitcoin, we think of them as being 100% immutable, but they're not. Like, we could all just run a protocol tomorrow that says the hard cap is 42 million. And if enough people ran it, then that would just be the new Bitcoin, right?
Yeah.
So we assume that due to self-interest, we wouldn't do something that stupid. But these things are just, we're resistant to changes to the code, but not completely immune. So with that being said, if a protocol makes any of these things stronger, then I would run it. And if the protocol weakens any of these areas, then I would say that was an attack on Bitcoin, and I would not run that protocol.
Okay. That's
and another thing, yeah. And so I also, as I said, I follow Jeff Booth, and one of the things that he says, the only thing that matters for Bitcoin is that it remains decentralized and secure. Those are the two important parts of the Bitcoin trilemma. The third part is scalability, and we should be able to do that on layer 2 and layer 3 potentially. That was one of the arguments for the block size war, and I know there's a lot of the core people and the Knots folks all want to make sure that they're not perceived as being in the big block camp, because they're seen as the villains of the block size war. However, I think it should be kind of pointed out that it seems like Satoshi himself thought bigger blocks were inevitable. So I don't necessarily think that increasing the block size is like evil or anything. Like, it is possibly, maybe needs to happen in the future, but it should, these types of things should be done with extreme caution and not like huge changes all at once, which was part of the criticism that Core V30 had. So here are some attributes that I think were put at risk by spam, and also which would have increased Bitcoin's attack surface by Core V30. So recognizability. The subset of that is acceptability. And this is kind of the argument that if, kitty porn or CSAM gets on the blockchain, it will immediately become unacceptable to some large portion of the planet. And so that's going to hurt Bitcoin's network effects. And right or wrong, I think that Tone Vays has a really good series on this. He's interviewed tons of core people and tons of Knots people, and I think he largely has some really bad takes on it. But Jimmy Song keeps him in check and corrects him every time he goes off the rails. But I will say that Tone Vays's one of his important contributions in that, if I want to throw him a bone, is that he says that Bitcoin needs resilient nodes. And so his criticism is that if people are so scared by, illegal or, bad things getting on the blockchain that they're going to be scared out of running a node, then he's like, those are not the type of nodes we need. He's like, we need resilient nodes that are just going to be, all in on Bitcoin no matter what. And I tend to agree with that statement to an extent, but I think that discernment is also necessary, right? So what do you do if you think that a successful attack has been made and the developers have snuck in some crappy code? It's open source, right? So what happens when somebody's reviewing the code and they're like, holy crap, there's a backdoor in here that lets whatever, the NSA track us, right? Well, the nodes are supposed to choose to not run that protocol, right? You should have something else to run. And that video that you sent me, was it Jupiter something? I can't remember that guy's name.
This Week in Bitcoin.
Yeah, This Week in Bitcoin. He actually said that he thought that this was going to be a threat to decentralization, which I thought was kind of ridiculous, because right now it's already completely centralized. Like Core has been dominating the protocol for over a decade. So the idea that someone else having some influence besides the monopoly is centralizing, I thought was kind of like obviously false, right? We want more protocols. We want Knots. Samson Mao and Jimmy Song, and I think there was one other guy. I think they're going to start a nonprofit to get another protocol going. And we need this. We need, at least 2 to 3 protocols that are all competing for node runners. And, when you've only got one game in town, you can basically run yourself like an empire or a monopoly. There's you're not really looking for consensus. And I think that's been happening with Core. So we need to make sure that, Bitcoin's recognizability remains intact. And if we let something horrible get onto the blockchain, its acceptability around the world, could plummet. Fungibility. This is the one where all of the units should be the same. And so ordinals and inscriptions confuse what should be a free market, right? So if you've got a rare penny that's got a misprint on it and it's worth $100, like that's confusing to the market. You can't go to 7-Eleven with a penny worth $100 and be like, okay, give me 200 candy bars or whatever. That doesn't make any sense, right? And so if you've got NFTs and inscriptions and things attached to sats, and now this sat is worth $10,000 because it's got a monkey butt picture on it, like that is screwing with Bitcoin's fungibility. So I believe that, these images are attacking Bitcoin through degrading its fungibility, right? So we like to say that one Bitcoin is one Bitcoin, but how can one Bitcoin be one Bitcoin if one sat doesn't equal one sat, right? If I send you a sat and it's worth a sat, but somebody else sends somebody a sat and it's got a $5,000 NFT on it, that's distorting, I think, what is, free market signals. And immutability. This is the one where, the blockchain has to remain intact, right? But if there was a successful CSAM attack and Bitcoin's acceptability was decreased, now we're in this unfortunate situation where we would have to sacrifice one of Bitcoin's attributes to save another, right? So you either retain your immutability and, Bitcoin is stuck with this horrible images on it, or you have to just take immutability and throw that in the frickin' garbage and reverse a transaction to get it off of the blockchain. And so I think it's just a threat that should be avoided at all costs, so that we don't have to make this decision. Because if it gets onto the blockchain, we are stuck, between a rock and a hard place of, do we retain our acceptability, or do we retain our immutability? And the Bitcoin network suffers as a result. So I think the Knots camp is saying that, look, if filters were allowed to continue, maybe the network would adopt them and that would be enough. But because Core has decided, not only, they've just basically decided by, you could call it fiat decree, that filters don't work, and have projected that into the future, that they will never work, they're just going to stop, using them altogether. And Knots, BIP-110 is a reaction to that, and saying, hey, you're taking these tools away from us. We want to continue with them. And not only that, but we're going to just, if you're going to take it away from our policy part, we're just going to put it onto consensus temporarily, to kind of give us a little bit of time to maybe avoid.
Can you explain the temporary part?
Yeah, so it's a user-activated soft fork, but that could be permanent or temporary, and it's scheduled to activate at a block that would take place around, I think it's late September, early October, and then it's set to expire about a year later. Meaning, if we left it as not being temporary, then there'd really be no way to reverse it without another fork. And so that should be avoided if possible. And so they've actually limited this to a certain time period, to give us a little bit of time to either come up with a better solution, or if this solution is acceptable, we could go ahead and extend the temporary soft fork into a permanent part of the protocol. But if the time is up and nobody wants to continue to run this protocol, then we just go right back to status quo now, and I guess it would be back to whatever Core's doing.
So do you think these 3 points, at least the bottom, can you scroll up a little bit just to kind of see? So definitely not recognizability, but number 2 and 3, do you think fees themselves can solve this and is enough? I know that fees now are pretty low, but if over time the fees do grow, so for example, like when ordinals first became a thing, I think it was like at the beginning of, mid 2024. It was around the halving. The fees went up. I think they spiked up to over 1,000 per VSAT.
Yep.
That's going to automatically contain a lot of things, right? From my point of view, and maybe I'm naive, but I would assume that the fees, if it gets used enough for these purposes, the fees would grow, and the fees would be enough of an incentive for people not to put some of these things on and not to attack the network. Do you think fees are enough or not enough?
Well, what would the fee? How high would the fee need to be in order to make free distributed data storage into infinity? How much would that be worth?
That's a good point.
Yeah. So not only, even if we're not including the illegal, immoral CSAM attacks into this equation, like free data storage, and not only that, but like in duplicate, like backups of backups, making every single Bitcoiner store this image into infinity. That's pretty valuable. And like, how high would that fee need to go? I don't think you can put a price tag on it. So no, I don't really buy that the fees are the filter. And to take that one step forward, let's just, I know it's, what is it called when you try to imagine yourself being your enemy? Something thinking. Anyway, try to imagine what some frickin' degenerate immoral, what would it be worth to them for them to not have to store it on their device, but to have it stored in duplicate on thousands of devices? Like how much would they be willing to pay? Like can we or really can we keep that fee? Can we beat it? And if we do, it's basically paying the extortion, right? You never negotiate with terrorists, right? If you pay the extortionist, they're just going to extort you for more money next week, right? If you keep it out of this this block, you're just going to have to pay more to keep it out of the next block and the next block and the next block. So I don't think that paying off the extortionist is a solution that is workable into the future. I think they have to be excluded first, and we'll deal with the fees of the filters thing, to a certain extent later. But yeah, I don't think there's a fee that can be high enough that can outbid someone who's desperate to outsource their degeneracy onto others.
I mean, that's a good point. I mean, the infinite, not infinite, but the permanent storage on chain is a good way to counter this fee argument, right? Because yeah, let's say right now it's going to cost. Let's say the fees are extremely high. Let's say they're at 1,000 VSATs or whatever it might be,
Mm-hmm.
and it's going to cost you $500 or whatever. But $500 and then now it's permanently on the chain. So,
I mean, and how much money do like all the people who went to Epstein Island are millionaires and billionaires, right? They're going to outbid
right.
them. What if one of those freak shows wants to put their images on the blockchain? You can't outbid billionaires.
Yeah, I mean it's a good point. It's a good point because the way I've always seen it is that the fees are enough of a deterrent, but if there's some psycho dude that's posting some crazy stuff on the network, yeah, it gets funky. I don't know enough about how to counter that argument.
Yeah, and so again, the core side is correct that because of tricky ways to get things onto the blockchain, we can't figure out. It is a cat and mouse game, and they're always going to be able to figure out ways. However, BIP-110 does reduce the attack surface in all of the most important ways right now, right? So let's, for example, say that you wanted to pay me $100 for something that was illegal, but may or may not be moral, right? Let's just say it was drugs or something, some back alley deal. I think most Bitcoiners would be like, whatever. You want money, you want to pay somebody else for money. It's a consensual contract. Everything is fine, regardless of what the state thinks about the legality of that transaction. However, if you tried to pay me with money, but instead of like George Washington's head, it had pictures of CSAM on it, well, now the transaction itself is immoral. And so I think that's one thing that arbitrary data does is it changes. It's not saying that spam is not a valid use for people wanting to buy and sell things. If you want to pay money for an image, you're more than welcome to do that, and you can do it with Bitcoin. But what you cannot do is put this picture on the money itself, because now, once it has that image on it, now I cannot in good conscience accept that money as payment, right? If you try to hand me a piece of paper with CSAM images on it, now I have to punch you. You know what I mean? It's like now I'm like obligated to to do violence, and this is supposed to, Bitcoin is supposed to take the violence out of the equation and make proof of work the way that we resolve these disputes. So that's kind of how I look at people saying, people that say that the filters are censorship. I think that's a misunderstanding of property rights, because if you understand property rights, number one, you get to use it, but number two, you are also allowed to exclude its use from others. And so if my node, I'm participating in a distributed network, but if you're saying that I can't even put up, selection criteria for what I want to have on my node, like that's making me kind of a slave to the network. That's not really, I don't think, a good understanding of what property rights is. So when you have people saying that it's almost like this is a violation of freedom of speech or censorship or something, and then the other side is saying, well, no, this is a violation of my property rights. I think that's the lens that you need to decide, because two people cannot hold opposing views and say that it's their right and both of them be correct. Like someone has to be wrong. And so I think a good understanding of what property rights even means is a good way to understand how the censorship arguments are false.
Yeah, I can't stop thinking about the fees, and
Yeah.
them not being enough of a turn. If someone is willing to pay a ridiculous like amount of money to post something, like I'm trying to think of what is the right, because logically, like it makes sense what core says, that
Mm-hmm.
if you have enough, fees should be enough to deter spam. In theory, that is correct, but then there's going to be somebody who's illogical. Yeah, it's a really hard one, because I mean, obviously that's why this is such a controversial thing, and there's no solid, clear
Yeah.
answer.
Yeah. And so what BIP-110 is trying to do is saying, look, these irrational, immoral people are probably going to be able to get their way to a certain extent. But going back to the example where I said trying to hand off a dollar bill with you know, immoral images on it, right? So if someone by some kind of trick, and this is why contiguous data comes up in the argument quite a bit, is the spammer purists are saying, look, these things can be just cut up into tiny little segments and included over multiple transactions, and then it can be built back together and you can form this image. And the BIP-110 people are saying, look, if you do that, like I can kind of let that slide, because it would almost be like taking some CSAM, cutting it up into a million pieces. I can't tell what it is, right? To a certain extent, if you lit it on fire and now it's broken down to its atoms, like is it CSAM anymore? Not really, right? If I can't tell what it is, now if you take those million pieces of paper and you tape them all together with Scotch tape and you recreate the image in your room because you're a degenerate and you want to see it, like that's kind of, I don't want to say acceptable, but I don't have to acknowledge that it contaminated the blockchain, because me just looking at the transaction, it's cut up. It's not contiguous, right? I can't just click on one transaction and boom, the images pop up. You have to go out of your way to manipulate multiple transactions and recreate that image. And if you do that and the law gets a hold of you, even as an anarchist, I'm totally fine with them, throwing away the key and burying you under the jail, right? I'm completely fine with that.
So I hesitate, and the reason I hesitate is because some of these things can bring in some unintentional issues, man, I wish I remember more of this, but I know that it wasn't Taproot itself that allowed the ordinals, because ordinals have been around or the equivalent of
Well, no, I think it's
or colored
no, I
coins
think you're
and
right.
stuff like that.
I think you're on the right track, because once Taproot came in, that was when they refused to fix the bug. And Luke actually said, hey, there's an exploit here that would allow people to include way more than we thought. And they're like, no, that's actually correct. And they changed, redefined some things to make it seem like it wasn't a bug.
Right. But it started,
yeah,
not even with Taproot, right? It started before that. I think SegWit
enabled some of these things. Yeah.
Correct. Yeah. SegWit plus Taproot then enable some of these things. So my concern is, so far, I mean, in principle, I'm agreeing with everything you're saying. My only concern is unintended consequences. This gets introduced, and then there's like, okay, well, we didn't realize that BIP-110, when you combine it with SegWit, or when you combine it with Taproot, or when you combine it with both those, now enables us to do even worse things. That's where the concern for me comes up, because it's like, yeah, we're trying to fix something, and we had the best intention, but holy crap, just realized we opened Pandora's box, and now it's like, how do we close this thing? So Is that a valid concern of mine, or is there something, or is BIP-110 pretty safe? And I know you're not a developer, but from what you've seen, is there a cause for concern? Am I kind of over worrying here for no reason?
Well, I think, yeah, it has been highly scrutinized, and they all software has bugs, and they have identified a couple here and there. Um, and as you know, there's bugs in core that are identified all the time as well. So it's not like it's second and third order consequences free. So you're absolutely right to be worried about it, but at the same time, we're already experiencing these second and third order consequences from SegWit and Taproot. So do you just let them go forever, or do you try to patch them? So you either need core to patch their own bug, or you have to come up with Knots and BIP-110 to patch their bug. I would prefer that core patch their own bug, but they're not interested. So not only are they not interested in patching that bug, they're redefining it as not a bug and expanding the attack surface to even more second and third order consequences, right? What are the consequences of blowing open op return to 100,000, greater than 100,000? Like, we don't know. So you kind of have to decide between the unintended consequences that you trust the most. And at this point, I can't really trust the people who created the bug and have no desire to fix it. So, I don't know how to read the code in BIP-110, but it has been scrutinized by even some core developers, right? Some core people actually helped identify one of the bugs and helped get it resolved. So that is actually encouraging. There is a little bit of cooperation between the two camps. Yeah. And if you've seen any of John Attack's videos, he's been kind of like a whistleblower about how it's almost like Bitcoin Core has turned into like a DEI company, and which is kind of crazy. And, there's all of these parallels in the Bitcoin space. And if you remember, Strive was the one who got in trouble for being anti-DEI. Do you remember that? Vivek was the one that was like criticized for being anti-DEI back in the day.
Yeah.
And now True North, who I participate with, was bought by Strive, and now I'm anti-spam against the DEI core people. So I don't know. History doesn't repeat, but it rhymes, maybe. And let me just say real quick that I do not speak for Strive. I only speak for myself. I have talked to some of those guys about the BIP-110 stuff, but I have no idea what Strive's custodians run. I would assume they run core, but I don't know. I don't have any insider trading information on that, unfortunately. And I think for almost any of these debates, a very good question to ask is, will this result in more or less people running nodes? And so spam itself is an attack on the size of the blockchain. And the bigger it gets, the less people can run nodes. Like, you want somebody in a third world country to be able to afford enough hard drive space to be able to run an archival node, right? And so if you're letting these things get full with spam, that is that's a centralizing effect. But again, the people who I'm calling pro-spam will call themselves anti-spam. They just disagree on the best way to manage it. So I think it's a good opportunity to recognize that I think everyone's doing their best, but it doesn't mean that everyone's right. Like, at the end of the day, if you're running a node, you have to decide on a protocol, right? Now, as a recommendation for Bitcoin treasury companies, though, I was considering recommending that they run Knots and BIP-110, but I think most Bitcoin treasury companies and their custodians probably run multiple nodes. They're not just going to have one node. So honestly, I think they could just run both. I think they can just sit this one out. They don't have to talk about it publicly. I think one of the things that maybe hurt the cause of the block size wars was a few of the companies came out in support of one side or the other, and that caused distrust, because a lot of Bitcoiners are like, screw fiat. Like if you're a big business, I'm just assuming you're one of the lizard people trying to control everything. So if you're supporting one protocol, then that must be the bad one. And I had this fantasy that Bitcoin treasury companies were going to come out in support of Knots and BIP-110, and instead of being the villains of the block size war, they would be the heroes of the spam war. And I think that was a little bit naive of me to think that that would happen, because there's going to be plenty of Bitcoiners that are like, they hate suit coiners, they hate Saylor, they hate Bitcoin treasury companies, they hate everything about, well, I hate everything about BlackRock, but they hate everything about the ETFs, and they just want it to be peer-to-peer transactions. But I mean, I don't know how businesses are not peers, but anyway, so I think, recommending that a Bitcoin treasury company come out in support of BIP-110 might actually do more harm than good. So you know what? Run both. Screw it.
Yeah.
Here's the problem though. So one of the guys seemed like he had a really good point, right? He came out and he's like, just run whatever you want. If you don't like Core V30, just stay on 29 or 28. He's like, I'm still on Core V10 or something, right? And he's like, it's fine, it works. However, if you listen to John Attack's interview, Core is actually trying to break some of the, well, maybe not, they're not trying, but they're definitely not trying to not break some of the old versions. He said that he identified a bug and he's like, hey, this is going to break some of, people running on 26 or whatever. And they're like, screw them. They need to upgrade. And so if you're thinking that you can just run version 20 forever, well, Core's going to stop supporting it. And they may just plow forward and break something that is critical to that version. And you might not be able to do what this guy is saying that you can always run whatever protocol you want. That's what Bitcoin is about, right? You choose your protocol, but it may not work. You can run a protocol that's broken all you want, but nobody else is going to run it. So you can be like the only holdout still running Core V15, but it doesn't do you any good if it's not compatible, if it's not backwards compatible with what everyone else is running. So at that point, I don't know, does your protocol turn into a hard fork and you're just like one guy running Core V10 and it's Bitcoin something else? It's a hard fork. Yeah, I'm a little out of my depths now, but I might be just talking shit. But the ultimate point is that if the developers are going to be not conscious of breaking stuff, breaking the old versions, will running those old versions even remain viable in the future?
Yeah. Do you think, so I think Chris from the This Week in Bitcoin, I think he mentioned that there was a threat or a potential for a block size war. Do you think this is to that scale, or is that exaggerated?
Interesting. Well, the block size war did result in some hard forks, right? So Bcash forked off from that. And so how would that work in this scenario? Well, I'll give my prediction. So I think some people have said that if BIP-110 gets to 10%, it's a done deal. They basically win, because the risk to the miners would be so great if they don't signal for 110 that they could end up getting their missing out on their block rewards. So as far as game theory in that sense, the miners would all defect away from the core side and start signaling for BIP-110. I think they probably have enough now. So my prediction is that they have a successful activation and that the miners capitulate and start to signal for BIP-110 as well. But there are a couple of scenarios where if half the miners do and half the miners don't, and then, is there a risk of just two different chains kind of like growing at the same length? Because that's what, Bitcoin is the longest chain, right? That's supposed, how this is supposed to work. But if there's like 50-50 hash rate and it just kind of goes this way, it's like, okay, is there uncertainty in the market and nobody knows which chain is going to be the real one? That could potentially happen. I think the likelihood of that is extremely low, but you should build that into your threat assessment, I suppose. What could potentially happen after a successful activation is the core side could get mad and decide that we want to create a user rejected soft fork, which would actively reject any of the blocks that are valid on BIP-110. If that happens, then they would need to, that would put the miners in a situation where they would like, okay, well, now do I start signaling for this? And then if that was successful, then it would, it would basically, destroy the BIP-110 movement, and the blockchain would just keep plugging along. If that fails, then the spam side could resort to a hard fork, and it probably needs to be specified that it would happen in that way, right? I think Tone said, hey, you BIP-110 guys, if you want to fork the chain, just fork the damn thing. And what he means by that is hard fork it off to your stupid altcoin and go, die a slow death like Bcash and BSV. But I don't think there's any scenario where that would happen, right? It would be a chain of events where the soft fork for BIP-110 either activates or fails. If it fails, well, okay, then we're just status quo. If it activates, the opposition could create a rejected soft fork. If that succeeds, then okay, BIP-110 has been defeated. But if that fails, which I think it would, the spam side would have no alternative but to hard fork. But it would be the spam side hard forking. It would not be the anti-spam side.
Yeah. Man, it sucks to see it get to this level, right? Because it's it seems like such an obvious thing to avoid. I just think that there are some valid reasons for the arbitrary data. And when I say that, I mean there's some use. I think multi-sig, or there's some stuff that I think Anchor uses.
Yeah, you can put, there's some serial number, like ordinals is kind of assigns like a serial number to every Satoshi, I think. Yeah. And then there are some, when I say valid, I'm going to agree with you to the extent that there's no ill intent there.
Right.
They're not trying to harm the system by throwing a little hash in there. But those hashes or those anchors can easily be done 83 bytes, maybe 256 at the most. I think Bob Burnett said as much, that these things can be done with very, very small amounts of data. And so if I was king of Bitcoin, I would snap my fingers and I would wipe out all arbitrary data, and all of these anchors and things that people want to do. I would just say, look, figure that shit out on layer 2. That doesn't belong on Bitcoin. Developers go develop stuff. Like, that's your job, right? Go figure it out. However, to the extent that they're already here, I can live with 80 bytes, right? I can, even if they wanted to, like, Core's like, okay, you know what? Satrea needs 256 bytes or something. I think they needed, you want to multiply it by 3 and go from 80 to 256. I could probably swallow that. And then what you were talking about with the second order effects, and we could watch that and we could see. And maybe something like that should be on a temporary fork, right? On block height, whatever, we're going to start allowing 256 bytes in mempool policy. That will expire in a year, and we can wait to see if this went to hell or not, right? If spam went through the roof, we might just let that expire and go back to the way it was. But that's not how Core rolled this thing out. They're like, not only are we going to bump it to 256, we're going to blow it to above 100,000, and we're going to deprecate the filter so that you can't even set it yourself. I think, those types of things are reckless and unacceptable. So I'm glad that Luke's doing what he's doing. It may not be the ultimate solution. Maybe this Jimmy Song, Samson Mao thing will be better. But for now, I'm happy with at least putting Core on notice that they have to develop for the nodes, right? You can't just it almost starts to seem like central planning. Like you can't just rule from on high and say, this is what you guys are going to run because we're the only game in town.
Yeah.
You kind of got to put them on notice and knock some sense into them sometimes, I think.
We're getting close to the end because I feel like I've kidnapped you. So I don't want to hold you back from your
Well,
from
why
your
don't you drop
stream.
from the stream and I'll just immediately roll into my next episode of Orange Pill Investor.
Pretty much,
I'll
right?
just keep, I'll just
That's
share my
what I think.
screen and
That's
I'll
what it
start making
feels like.
trades.
I feel like that's exactly what you're gonna do. I just had one or two more questions for you, and then this one I should have brought up earlier, but I wanted to
Hmm.
get at least your quick take on the new 2121 from Strategy. See what your take is on that.
Yeah, I mean, I thought it was inevitable. If Stretch is the iPhone moment, they're going to have to ATM the hell out of it. I was kind of surprised that they reduced the ATM on, was it Strike or something?
Hmm.
Like, I figured just leave it there. It's whatever. Nobody's ATM in that thing anytime soon, unless Bitcoin rips. But I was kind of surprised that it was 2121, other than just the 21 aspect, because I thought there was some kind of ratio that they need to ATM the common to Stretch in order to keep their amplification ratio in a certain amount. So I was kind of thinking, but you know what? Maybe the optics on that, if they rolled out a 21 million Stretch ATM and then like a 63 million common ATM, people might be like, "Oh, I see what's happening. You're about to ATM the crap out of the common more than the Stretch." So
Yeah.
maybe it was good for optics to do 2121, but um, I think that's bullish. I mean, that's a ton of Stretch they are anticipating being able to sell. So
Yeah. The next question I had was, could you even give an MSTR price prediction without even knowing what direction Bitcoin is going to go? Is that even possible? Like, are we
not
at that
really.
point? Not
I
really,
mean,
right? So,
to a certain extent, if Strategy is going to keep buying Bitcoin though with Stretch purchases, even if Bitcoin stays flat, Strategy's price should go up because their NAV is going to increase. So even if Bitcoin trades sideways for the next 12 months, however much Bitcoin Strategy buys should increase their share price. If it's even if it's trading at 1x mNAV, to a certain extent.
yeah, that's
Well, but
true.
then they'll be diluted, so maybe the dilution will cancel it out.
I know
I don't know.
that's why there's so many. You got to be like Doctor Strange, trying to like getting into different multiverses and trying to figure out like how, because every little thing is like a butterfly effect.
Hmm. Yeah, and we do have a bunch of catalysts. I mean, the whole spam war that we just talked about. Once that's resolved, I mean, BIP-110 is going to activate end of September, early October. So we're going to find out whether it's successful or not at some point. It does have escalation dominance in the sense that the core chain cannot wipe out the BIP-110 chain. The 110 chain can only wipe out the core chain. So it's almost a little game of like infinite chicken, which is why I think even at the current adoption levels, BIP-110 is a successful activation because they can just last forever and they can never be wiped out. Um, and that's what the perverse incentive is for the miners to defect, is that sure, if they never defect and they all can like uh, interlocking arms, like all, if you can trust all the miners to act together and never change, then they're all safe. But the as soon as a couple defect, like it's just a domino at that point,
Yeah.
and the core side becomes the shorter chain and just gets wiped out. So um, I don't even know why we got on that tangent.
No,
But
that's fine.
it's Catalyst. So that's like the spam war is gonna be over, right? The block size war was cataclysmic. I'm sure the price suffered. I was I was getting into Bitcoin, but I didn't really give a shit. I thought the hard fork was cool. I loved it every time a hard fork came out because I got free airdrop coins. I had frickin' Bcash. I had Bitcoin Diamond, and I had Bitcoin Gold, and I had all this crap. And I just wanted to know, did my cold storage device support it so that I could send it to the exchange and sell it? Like I was just happy getting free coins. I didn't realize that this was like an existential threat to Bitcoin back then. I was, I thought it was fun. But yeah, this is all going to blow over. We'll look back on it and say, oh yeah, Bitcoin's price sucked because of the war. And some people will be like, Bitcoin's price sucked because of the spam wars. The first war I meant was the war in the Middle East or Ukraine or whatever, World War III. Some people will say, oh, Bitcoin's price was down because of the business cycles and the interest rates or whatever. Everybody's going to have their theory, but all of this stuff seems like it's going to get better. Eventually Bitcoin takes off, strategy takes off. If we thought they were selling a bunch of stretch in a bear market, it's going to be kind of ridiculous when Bitcoin takes off. So Trump needs the market to pump before midterms, which kind of lines up right with the spam war maybe potentially being over.
Midterms are in November, or is it?
Yeah. So late this year, there's going to be a lot of things hopefully that wrap up. I don't know if we'll be out of the Middle East by then. I suspect we will be lured into a ground war, and we'll have a draft, and the Second American Civil War will follow those protests. So hopefully this will be all wrapped up, and that will be a nice catalyst as well. But the market doesn't really hate war. If you notice, the stock market may dip, but even if we're in a full-blown war in the Middle East, I don't know if the market really cares. It might pump based on the earnings that the weapons companies will be raking in. So we're definitely gonna have to print regardless of what we're doing.
Yeah, I can only see I see mostly good catalysts. The only negative that was brought up by the Richard Byworth podcast was he says that there's only one. Well, I don't know if you can call it a black swan, because a black swan is something you don't see, right? But
Tether.
The only thing. Well, yeah, I guess that's one.
I'm gonna keep calling Tether black swan until I'm right. I'm just gonna keep saying it. If it takes me 20 years, eventually I'll be right. Yeah, nobody talks about Tether FUD anymore. Everybody gave up. I'm the last holdout.
Well, there was this one guy that I think he's coming back. Chico Crypto. I don't know if you remember Chico Crypto. This is like 2017, up until like maybe 2-3 years ago. And he kind of fell off the face of the earth, but I think he's coming back. He was kind of like the Zach XBT, where he's bringing up some of these things, and his thing was always Tether, and they were the cause for the bear markets, and eventually this and that. Hasn't happened yet, but yeah, there's a good chance that it could be, right? But no, Richard Byworth's angle was that the central bank, so the Fed, could basically, with their infinite money supply, could short on the futures end Bitcoin to some ridiculous number, like let's say 5,000 a coin, and then possibly flip the switch and then start being the buyer. So, but aside from some crazy event like that or some other unexplainable black swan, I see only, maybe I'm biased. Obviously, I'm very biased towards Bitcoin, but I only see positives, man. I mean, at the end of the day, it's as long as Bitcoin isn't broken, it's got all the attributes that you said, right? It's got a scarcity. It's wild how some people can say like, oh, it's not scarce because there's 2.4 quadrillion satoshis, and they just don't get the concept that it's divisible, but it doesn't mean that the scarcity is still not there. It's like the pizza, right? Like you can still slice up the pizza multiple times, but there's no more pizza. The pizza is what it is. You can cut that thing into atoms.
How many pieces can you eat?
Exactly. So yeah, it's an interesting, and even then, it's only divisible to 8 digits, right? So, but whatever. So that would be the negative, the only negatives that I can see. The catalysts are great. So I guess instead of starting with strategy, let's start off with Bitcoin. What do you think Bitcoin's price is going to be at the end of the year?
Oh boy, end of the year. So if we get resolution from spam and they start to pump for the midterms, lowering rates, let's end Bitcoin at 150.
Okay. And so let's say that Bitcoin's at 150 at the end of the year. What's strategy at?
Yeah, I guess they're going to claw their way back to 400, maybe.
You think that much? considering all the dilution and whatnot?
Well, that would be, Bitcoin would be a 2x. Well, actually, Bitcoin would be, we're down to what, 66, 67 right now? I don't know what we're at today.
Yeah.
That's a flex that I don't actually know the price. You know what I mean? I'm not like staring at it. So actually, I mean, it would be at least a double. So, strategy should go up some multiple of that. So, 2-3x more than Bitcoin goes up.
Well, that's
Bitcoin
true, because
doubles,
that's where the
strategy
mNAV
should
kicks in,
4x.
right?
Yeah, if it
That's where that
responds
premium.
at all. Yeah, if it trades as a levered Bitcoin play, then strategy would triple or quadruple from there.
Dang. It's so funny how it's not that long ago that we were in the 400s, and
Yeah,
now it feels, now people are stressing out. They're like, it's never going to go over 200 again.
yeah. Well, think about this. Strategy was at 500 when they had half the Bitcoin,
Yeah.
right? So we were at all-time highs at 125. Actually, I don't even think we had gotten to all-time highs
But
yet
that's
in November.
pre-dilution, right?
Yes, true.
Yeah.
Absolutely. So yeah,
that's the
Bitcoin,
one.
they'll have twice as much Bitcoin, but they'll also have a bunch of more outstanding shares. So I don't know how that works out, but
Yeah. Yeah, that's the hard part for me, where it's for a while I had my own spreadsheet, and I was tracking everything, and it just got to the point where I'm like, oh well, I mean, yeah, but it gets once the prefs came out and all that, I was like, it's just unrealistic for me to do it. I guess you can put it into AI and do it that way and try to see if it can figure something out, but I think it just gets to the point where it's like, listen, the core thesis is Bitcoin's going up, right? And as long as they manage everything correctly, they don't slip. Like you said, right? Like you have to kind of be on top of strategy and make sure that they don't make a dumb move. But as long as they don't make a dumb move, then number go higher, right? Number go up.
Yep.
Yeah. All right, man. Let's wrap this up. It's been if you were joking about making it a 4-hour podcast,
I told you.
but I feel like we're there. Maybe next time we could do that. Can you tell people how to find you? Let me share. Actually, I'm going to share the screen here while you do your thing. So people can see your channel.
Yeah. So my title, in parentheses next to my name, it's at Nithu Sezni on X. And I believe YouTube is that is YouTube. Yeah, it's still, at Nithu Sezni. I forgot I added the extra Sezni on there. Yeah, that's on YouTube and on X. It's basically the same. Should be able to find me.
Awesome, man. Yeah, so everybody give.
And I'm on True North not every Wednesday. I won't. I'll be on vacation this week, but most Wednesdays I'll be on True North as well.
Awesome. Yeah, so everybody follow and subscribe to him, his channel, his X. Follow people that have high signal, and you definitely have high signal, my friend. So
I appreciate
thank you so
that.
much for not only being a stand-up guy, being somebody of character into space. I feel like that's something that's lacking a lot. I consider you a friend now, so I really appreciate you
Likewise
showing up and spending all this time with me and educating myself and other people. Yeah, like and subscribe to him, to this channel, if you like what you heard, and we'll catch you guys on the next one. Thank you.
Appreciate it, Tony. Thanks for giving me a second chance.
No problem. Thanks.